This is the weekly recap from the 26th to the 30th of January 2026. Following the early week corrections, the VN index saw a significant recovery toward the end of the week thanks to the return of the cash flow. The index closed the week at 1829 points, marking a volatile stabilization period. Domestic cash flow remained robust, partially offsetting foreign selling pressure. The average daily trading value on the Ho Chi Minh Stock Exchange stayed around the 30,000 billion VND mark, minus 14% versus last week. This was the second consecutive week that average liquidity went down compared to the previous. Real estate was the strongest performing sector, acting as the primary driver of the market sentiment. Stocks such as DXG, PDR, DIG, and CEO surged with impressive gains, attracting substantial speculative capital after a period of accumulation. Alongside real estate, banking giants like VCB, BID, and CTG maintained steady momentum, helping the general index avoid deep declines during sessions of heightened selling pressure. A major downside this week was the aggressive net selling by the foreign investors, with capital outflows reaching 1.5 trillion VND. Selling pressure was the most significant on VIC at 1313 million VND, followed by VCB and MWG, hindering the index upward momentum. On the other side, the most purchased stocks were FPT, MSN, and PNG. The market is gradually stabilizing after a technical correction. However, investors should remain cautious of the short-term profit-taking and sector divergence. Monday, February 2nd, 2026. Early plunge followed by recovery. VN Index holds the 1800-point mark. The market started the week under extreme sell-off pressure, with the VN Index at one point dropping over 30 points and breaking below the 1800 mark. However, strong bottom fishing demand led to a significant recovery, with the index closing at 1806 points. Trading value surged over 35,000 billion VND on the Ho Chi Minh Stock Exchange. High liquidity during the recovery phase suggests that capital for bottom fishing is actively waiting at lower price levels. The spectacular pin bar recovery was driven by a reversal in large-cap stocks. Notably, the oil and gas sector and certain banks returned to green territory, acting as a lifeline for the index. Real estate and securities remain the focus of the correction. Many tickers such as NVL, DIG, and VIX narrowed their losses, but still closed deep in the red due to post-holiday profit-taking and concerns over margin debt. Foreign investors ended the day with a devastating net selling value of almost negative 2,500 million VND. VIC, VHM, and VCB suffered the most severe selling pressure, while BSR, VNM, and MSN were top 3 of the buying list. The VN Index holding the 1800-point mark indicates that this support level remains relatively firm. The market is likely to accumulate around the 1800 to 1830 point range before establishing a new trend.